It's time now for a look at the day's top business news. France 24 business journalist Brian Quinn now joins us from home. Hi, Brian. You're going to start with the stock market seeing a boost following the signing of the world's largest free trade agreement on Sunday. Tell us more.
Well, Jeannie, Asian stock indexes definitely got a nice pop on Monday, particularly in Japan and Korea. European markets also currently trading higher as investors on the continent focus a bit more on the COVID-19 situation here and in the U.S. CAC 40 in Paris still up over 1% at midday. Well, those market moves follow the signing of the Regional Comprehensive Economic Partnership on Sunday. The RCEP, as it's known, brings together 15 countries across the Asia-Pacific region, including South Korea, China, Japan, and Australia. These member nations make up almost a third of the world's population and 30% of the global economy. Well, the deal is set to eliminate around 90% of tariffs between those members. Analysts say that could boost the world economy by roughly $200 billion within a decade. Now, this pact is being seen as a big win for Beijing, as it helps to cement China's economic influence in the region while not really requiring much in the way of environmental or human rights considerations. It's also being seen as a big miss for the U.S., which pulled out of the more ambitious Trans-Pacific Partnership as one of Donald Trump's first actions in office as president. One other notable non-member is India, which dropped out of negotiations in 2019 amid its growing tensions with China. Well, RCEP is historic in that it's the first ever trade deal between China, Japan, and South Korea. We saw that reflected on markets earlier today. Japanese exporters making big gains, especially in the auto sector. Korean tech firms like Samsung got a nice bump as well. Some of those gains are also probably due to some favorable data coming out of the region showing the Japanese economy growing by 5% in the third quarter. Chinese manufacturing also beat expectations. Asian economies overall are currently seeing some of the best results amid this global pandemic context. And this trade deal is likely to reinforce that trend as more of its provisions come into effect over the coming months.
Brian, another of our big stories today is the launch of SpaceX's Crew Dragon capsule to the International Space Station. This isn't just rocket science, it's also big business. So what can you tell us about some of the financial incentives behind Elon Musk's high-flying endeavor?
Well, Jeannie, Sunday's launch is the latest step in the privatization of U.S. space travel. Up until 2011, NASA owned and operated just about the entire U.S. space program. That situation ended with the closure of the Space Shuttle program. Since then, the agency has been increasingly turning to private industry. NASA has so far committed around $8 billion to what's known as the Commercial Crew program. The idea is to let competition among private firms make smaller missions like going to the International Space Station as efficient and as cheap as possible so that NASA can focus on going first back to the moon and then onto Mars. The two main companies that have been vying for bids in this context here are SpaceX and Boeing. Boeing's contracts with NASA are worth $4.8 billion. SpaceX's are worth around $3.1 billion. Hasn't worked out so well for Boeing so far. The firm's about a year behind SpaceX after a test flight of its Starliner capsule failed to reach the ISS in December. NASA, though, estimates that using private firms has saved it up to $30 billion in development costs. For instance, the agency has given SpaceX about $1.75 billion to develop Crew Dragon. Development costs for the Space Shuttle, meanwhile, were $27.5 billion. Operational costs also now far lower. The Space Shuttle launches used to cost around $1.75 billion each. Crew Dragon launch now costs only $400 million. And it's actually not only Boeing versus SpaceX this situation. Since the end of the shuttle program, NASA has been paying Russia, in fact, to take astronauts to the International Space Station, and that has not been cheap either. The price per seat on a Russian Soyuz rocket has gone from $40 million in 2011 to over $90 million for the most recent missions. It's been a critical revenue stream, in fact, for Russia's space agency, Roscosmos. It could be about to dry up, though, because the price per seat aboard Crew Dragon is just $55 million. So what we're seeing now is essentially a price war between SpaceX and the Russians. The head of Roscosmos says SpaceX's low price is only possible due to top-up funding from NASA and the Pentagon. The Russians, though, are now dropping their seat price by 30% in a bid to compete, really. NASA says it's not a competition. U.S. astronauts will still fly on Russian rockets. Russian cosmonauts are welcome on U.S. commercial flights. The reality, though, is like many areas of U.S.-Russian relations, spaceflight has been a bit of a source of tension lately, and it's not likely to get any easier in the near future as the two separate a bit more.
Brian, just to wrap up now for business, European firms are looking at potentially billions wiped off their valuations. That's as a group of activist investors is pushing them to account for the effects of climate policy in their financial statements. Tell us a bit more about that.
Well, Jeannie, this is part of a long-running push by investors to get carbon-intensive companies to face up to the reality of climate change and the necessity for increasingly strict emissions policies. It's a coalition called the Institutional Investors Group on Climate Change. They sent a notice today to around 36 European firms detailing how these firms should account for the expected financial consequences of the 2015 Paris Climate Accords. Those investment managers are responsible for $9 trillion worth of assets. Among them are the companies JP Morgan and Fidelity. Essentially, these asset managers feel that carbon-intensive companies, particularly in the energy and aviation industries, are not being realistic about what adhering to the Paris Agreement was going to mean for their bottom lines. Now, most governments have not yet made business impact disclosures vis-a-vis climate change necessary. That is starting to change. The investors want to see that process sped up and hopefully mitigated by some more serious decarbonization efforts.
Brian, thanks so much for that. That's Brian Quinn with our business update.